Greetings, members one and all of the Salivation Nation. Russia is getting more gold, and they're probably doing it at a good time when the prices have dipped a bit now. But they're stockpiling. Why? Because they're wanting to get away from the US dollar. Let's explore. Yes, this comes to us from Sputnik News. And Russia's gold reserves, they have scaled new highs in a growing shift from the US dollar. And I think this is going to be something we'll probably continue to see, really independent of any kind of price movements in the yellow metal. Russia's been stockpiling gold bullion in recent years in an attempt to lessen its economy's reliance on the US dollar, with forecasts showing the country's gold and foreign exchange reserves are set to outstrip those of Saudi Arabia. Russia's gold bullion stockpiles are now worth $109.5 billion, according to the latest figures from the country's central bank, on the back of a push to steer growing international reserves away from the US dollar. Data released by the Central Bank of Russia on Friday shows Russia augmented its stockpile of the precious metals by more than $7.5 billion in 1 month, with the share of gold in the nation's reserve securing a new record by scaling the 20.7% mark from its previous 19.6%. While Russia's international reserves have been making impressive gains, posting record highs has not seen since February 2013. Foreign exchange reserves rose by around $9.2 billion, or 1.28%, in 1 month to reach $529,083 billion on the 1st of September. Russia's bullion holdings stood at around 2 million or 2,217.68 tons by late July, after sweeping up another 9 tons of the precious metal in 1 month. Thus, since the start of the year, the country's central bank has augmented its gold holdings by a total of 106 tons. Its reserves are comparable in volume to those of Italy and France, according to the World Gold Council. And actually, let's see if we can see what this shows here. The top, among top nations in gold reserves. Let's see what this shows. Maybe there'll be a chart or something like that. It doesn't have a chart, but anyways, this is data that we'd actually seen from another video as well too. But according to the recent Bloomberg forecast, if the current trend of boosting international reserves persists, including foreign currencies and monetary gold among other assets, Moscow is on course to overtake Saudi Arabia as the 4th biggest holder of foreign currency reserves. The top spots in international rankings are held by China, Japan, and Switzerland. The growing stockpile would likely provide Russia with increased influence within OPEC and stabilize its national currency, the ruble, even in the event of plummeting oil prices, claim expert forecast. Russia has been increasing its reserves of the precious metal in recent years while selling off its U.S. Treasury securities. The country used to be one of the largest investors in U.S. debt, while according to July data, those reserves have dipped to $12 billion, which is their lowest since 2007. Russia's one among several states promoting a shift from the dollar to national currencies in a bilateral trade, as Moscow previously criticized the U.S. for abusing the reserve status of its currency. You know, in many ways, and I'm a patriot, but I can't really fault them for that. However, most of these are nations that are not really particularly friendly to the United States, but I think if we start to see other nations do this that are friendly to the U.S., and then we can see some real problem for the dollar. During his speech at the St. Petersburg International Economic Forum in June, Russian President Vladimir Putin slammed the U.S. for trying to foist their economic dominance on other countries and argued that the global role of the dollar should be reconsidered. Now, that's very interesting and somewhat predictable, I think, for sure. There it is. Having become the global reserve currency, the U.S. dollar has turned into a tool for the issuing country to put pressure on the rest of the world, Putin said. A trend of abandoning the greenback has become apparent in a recent report on the economies of the BRICS countries, which have reduced the use of the U.S. dollar in mutual trade by 20%. Yes, indeed. Forecasts show gold to score new highs. Analysts predict that the price of gold is expected to continue to grow amid investors' mounting concerns over a looming global crisis compounded by raging trade wars, Brexit, escalating tensions in Iran, etc. Jittery investors are left with the option of transferring money from stocks to gold, which in turn would push the demand for precious metal and cause its price to surge. There you have it. That's interesting. Now let's take a look at the markets and see exactly what they're doing right now. We see that the markets are moving downwards in all the metals except for palladium. Palladium shot up. Well, it took a little bit of a climb, 0.13% to $2, up $2 to $15.49. But gold is now dipped under the resistance, what I consider a resistance level of $1,500, just barely now, $14.99.40. And silver is down 23 cents to $18.09 is the ask price. $17.99 is the bid price. So it's skirting right around that resistance level of 18. Now remember my video before where I talked about $1,500 gold and $17 silver. Well, now this is where that ratio comes into play, and silver is now barely hanging on to 18, and gold is just barely under 15. So is this pullback that we're seeing as of late? The markets have done relatively well. The stock market up a little bit today, but I think that's probably having some effect, and people feeling a little safer now about things. At least there's not been any movement otherwise or any news that would spook the market, so to speak. So what does this mean for gold and silver to come? The fact that we've seen these numbers falling a bit, but still relatively high from where they were just weeks ago, I think tells us that the metals are possibly marinating, as I've said in a prior video, at around this level, $1,500 gold, $17 silver, even though silver's now holding on barely to that $18 level. Will continue to do so. We shall see. Although we must confess here that silver has taken a bigger hit on a percentage basis today at over 1% here. And so translating that into the markets and how silver moves more volatile than gold, we'll see how this pans out in the coming weeks. But I think that with this being said, it would take just one little thing to spook the markets, and these metals could go up quite a bit more from where they are. And if they do pull back again after that, we may not see the pullbacks to where they are now. But we'll see. If we continue to see the markets do well and good news or no news, sometimes no news is good news with the metal prices, well, we might see a slight dip in the metals prices to come to more realistic levels. But we'll see. I think the numbers to watch are $1,500 for gold to see if it goes below that, and $17 for silver. That gives silver a good solid dollar to move in the other direction, and it may not get there. It may stay above $17.50. We'll see. So anyways, there you have it. That's where the markets are. Central banks around the world are accumulating gold, especially those that aren't particularly friendly with the U.S., as I mentioned here. And you see Vladimir Putin making his case about the U.S. dollar, feeling held hostage by it, and that's been the goal of the BRICS nations for a while, doing their trading with each other, trying to avoid the dollar as much as possible. So fascinating indeed. Post your thoughts below about these developments here and about Russia's addition of gold reserves. And so there you have it. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.